Welcome everyone to a new video, ATFX. My name is Gonzalo Cañete. I'm here to share with you a quick review of the week, make you a kind of fast and fresh summary of the week with the main data released by different countries, the main most important countries. We're going to talk about Europe, US and Asian market. Also, I'm going to include commodities. So all I'm going to give to you right now, it's a review for the whole week to give you a different angle or perspective, clear perspective of what's going on equity, what's going on fixed income, what's going on in commodities, and also on currencies. So first of all, and before I forgot, let me mention to you that through LinkedIn, I publish every morning freshly a few bullet points, giving to you the summary of the last 24 hours of any kind of new or data release that is affecting the market. So if you want to keep updated, or you like macroeconomic reports and news, you can just find the publications I'm doing, the post through LinkedIn, or you can also contact me by email, and I will happily include you on my private newsletter. So I will send to you every morning freshly the news. Now, going to the point, one of the things I was mentioned this week, it was the UK fiscal plan. We're going to talk about also the fact that the last 2-3 days, the market has been really flat, really calm. After 2 weeks of super bullish market, rising and rising and rising and breaking out every single resistance, moving average, and main targets or levels that we got, particularly in SP 500 in US market, but also on the European market, on DAX 40, for example, is one of the markets we got under the radar, and every single resistance has been broken. Well, the last 2-3 days has been completely flat, calm, rising just a little bit, but we can see how the market is losing power. Probably because these last 2 days has been back holiday in US. So when Wall Street is the biggest equity market in the world, so if they are on holidays, it means like the volume, transactions and volume drop massively. Well, anyway, going to the main point, one of the things I would like to mention is how the pound was getting more strong against other currencies. For example, we have seen GBP USD rising, Euro GBP dropping. What's the reason? The reason is the new fiscal plan introduced by UK government. It was composed by 21 billions of pounds of public stimulus expenditure. We also have seen how the Debt Management Office published the intention to issue 237 billions of pounds in new bonds. The expectation was 222 billions issued by bonds. That was the expectation done by the Reuters pools on fixed income traders. So apparently those numbers are bigger than expected, and therefore, because it's going to be more bonds in circulation, is one of the reasons why the bond was increasing the yield, and then and so on, just attracting more capital and investment flow to UK bonds, which is, by the way, the same strategy that US was using. The Federal Reserve was using the same strategy, increase the amount of bonds in circulation just to increase the amount of how can I say, collection of dollars, just to reduce the liquidity instead of touching the interest rates. Something that even Jerome Powell has admitted publicly on the last conference, like the situation of the fixed income market is actually helping to the Federal Reserve, or reducing the needs to increase the interest rates in the future. So I believe the UK is probably using the same strategy, increase the amount of bonds in circulation just to reduce the liquidity of pounds out there. Yeah, however, retail sales in UK has been dropping worse than expected, which means like in one hand we got a pound that is getting stronger, we also got a kind of a stimulus and potentially tax cuts in the coming months from the UK government, which is good. But in the other hand, we can see how retail sales are dropping, still dropping. Therefore, the threats of potentially a recession in UK economy is not still out of the map of the picture. Second thing, we have been watching the oil dropping. Let me go to oil market. We have seen the oil market dropping. season after season. I mean, we seen how it was close to 77 dollars per barrel in Brent. Similar numbers in US oil. It was dropping to $72 per barrel, and still from there was rising little bit. The main reason why the oil was rising 2-3 days ago, just little bit, because don't forget that since the beginning of October, we have seen the oil mainly dropping. We are coming from $93, $92 per barrel to the current levels at the moment. And this indicates probably the perception that, first of all, those countries who produce the OPEC, the countries who produce oil and energy, postponed the meeting. They got it by the end of this week. They proposed to 13th of November, which means like something is not completely clear in those meetings, which I'm talking about, for example, certain discrepancies that we know exist between those countries from Africa with the countries from Middle East. For example, Saudi Arabia publicly has announced the intention to reduce the production of oil, but some other countries from Africa who are members also of this cartel mentioned that they are not completely agree with the reduction of the offer or production of supply of oil in the international market, which means like those members of the club are not all of them agree on the same strategy, and therefore we cannot be sure that the market the price gonna rise by the cut on the oil offer, which is very interesting because it was something like US was expecting for a long time ago. Talking about US, we also have seen early this week, by Monday night to Tuesday, it was the meeting minutes from the Federal Reserve. They published the resolution of the meetings, and one thing we have seen on that resolution is, first of all, that it's not clear the position that it was holding a few months ago. We can see that Federal Reserve seems more calm. It's taking in consideration a more balanced position between growth and inflation threat. I'm talking about that because they see the market is getting, the economy in general in US is showing certain numbers that are not as nice as we expect. It's actually showing certain weaknesses in labor market, in retail sales. These concerns start to be on the table of Federal Reserve, and therefore we think that the Federal Reserve is start to take in consideration the growth or how the interest rates are affecting the growth, and therefore the inflation is not now the main concern. It's a kind of balance between growth and inflation. They need to start to control more or less the stimulus they cutting with the interest rates, and therefore probably what market is reading right now between lines is Federal Reserve is over, has peaked, and probably we are not facing any new interest rates increase in the coming months. And actually what the market is discussing right now is like probably by the next year, some of the quarters we're gonna actually see interest cut. Yes, saying that, also we have seen how the dollar has been dropping, even keep dropping today. As you can see, the charts are really clear. We have seen a dollar dropping for the last 2-3 weeks. I think this is a result of that position of Federal Reserve. It's the result that has matched or has worse the macro data it is in US. As much the dollar is dropping by the interpretation that the Federal Reserve is over and is not gonna increase interest rates anymore. We also got the Thanksgiving trading volumes. We mentioned all of this already in the beginning of the video. In relation with Europe, we have seen also one of the main indicators of economical activity, PMI, Purchasing Manager Index, has been dropping. In the case of France, is still below of 50. You know that whatever is the number above 50 indicates expansion, whatever is the number below 50 indicates contraction on the economy. In the case of France, both services and manufacturing are in contraction. We also have seen those numbers for Germany. By the way, also in the case of Germany, which is in contraction, we also got this morning the Q3 of German economy, GDP growth, interannual GDP growth, it was minus 0.4% compared with the minus 0.3% expected. Therefore, it's even worse than expected, and expected number, it was still negative, which means like Germany is for the third period in recession. Either it's not growing or it's contracting the economy. In line with the rest of European Union, which is minus 0.1%. We know that number from the last week. So I think we can start to talk openly about the recession in European Union. Even Francois Vizot, sorry for my friends, it's a member from ECB, the Central Bank of Euro, has mentioned during the week that probably the interest rate is likely to remain for the next few quarters. Therefore, is suggesting that Central Bank of Europe is not going to touch interest rates neither for the coming quarters. And yeah, we have seen also the existing home sales from UK dropping, from US dropping 4.1% in October. Is the worst performance since 1992. We got really interesting thing happens on Tuesday. It was a Germany Constitutional Court announced that it was actually blocking certain budget approved by the government of Germany in relation with the renewable energies and green energies. They were using a kind of excess or surplus on the budget to invest on green energies and renewable energies, and the Germany Constitutional Court said that it's not accepted that manage of the budget, that kind of measures they planning to take. And it's actually good news because these kind of measures maybe could lead to a softer fiscal rules in Europe. And so far what we know is the European Commission mentioned that the fiscal rules are probably not being taken in place until the European elections next year, which means we got a few months extra of softer fiscal rules, which is one of the main reasons that is forcing the governments in Europe to cut services and to modify the budgets, and therefore affect the expectations on the growth on their home economies. Yeah, I think that's all in terms of news. I want to take a look quickly to the charts and see what's the main levels we are facing. Let's start with US markets. We can see SP 500 getting really close to 4,600 points, which is, in my opinion, one of the most close resistance we have seen during the year. Take a look at the end of the summer is when we were around 4,600 points. We lost on July the last maximums on the market, which was 4,613 points. Actually, top it was 4,634.50 points, and since then we're here. I believe that after more than 2 weeks rise in the market, almost practically day after day, except 2 or 3 days, 2 or 3 sessions as exception, with the little pauses. The rest of the days the market has been rising constantly, and based on the theory and based on the intuition we got on the market, when this happens, it means like a correction is closed. It won't be nothing strange or weird if the next week we got 2 or 3 seasons just of selling, moving the market price again to those levels like 4,500 points, even below, but mainly the last resistance, which is here in the area of 4,500 points. Let's see. Remember, I'm not here to tell you what to do with your money. I'm just sharing you my view and my opinion about the market. If you want to invest in financial markets, taking in consideration they implicate risk, and you should speak with a financial advisor first. Now, saying that, NASDAQ is doing amazing. This is the current prices now in NASDAQ. So the week has been spectacular for NASDAQ. The last 2 weeks have been awesome. You can see that the moving averages are gone completely to 155 moving average. Also neckline from the last bearish figure we detected weeks ago in the market. It all has been broken. The shoulder of that figure in both cases has been broken. And also we are now breaking out also the last maximums of the year. this summer. So right now NASDAQ is just touching the 16,000 points, knocking the door of 16,000 points, and I believe if we manage to consolidate the price above those levels, the next resistance gonna be in the area of 16,500 points, more or less. But again, keep in mind that if a correction on the market's coming finally after more than 2 weeks rising, probably we will see the prices dropping naturally to 15,700 points around, and that's completely fine and natural. Again, it's a normalization of the price. Different story is Russell 2000. I have drawn here what I believe it is shoulder head shoulder inverted, and therefore a projection of this figure to the top of the market, which is, if that happens, actually, it will be in line with SP 500 and with NASDAQ. Otherwise, Russell 2000 is moving completely different than NASDAQ and SP 500. You have seen this pattern, shoulder head shoulder in SP 500. It has been taken completely. In NASDAQ, absolutely yes. It has been taken and even go farther than that. But in Russell 2000, that shoulder head shoulder has not been taken. The levels are still below the neckline of the chart, and therefore please keep an eye on Russell 2000 because it's very interesting market to follow up because it's acting completely independent from the rest of the markets. Flying to Europe, we can take a look also on German market. Look, it's doing really well actually today because this morning was starting in the area of 16,000 points. It's a main goal breakout these levels because it's the 50% of the range, this range of price that formed from April until September, when we drop below those that range of price, and therefore I believe if German market can keep the prices quoting above the 16,000 points, probably the next target is 16,300 points. But if US market is dropping, probably it's gonna provoke a kind of sell-off in German market and then move again to this area of the market. Either we move in this range or either we move in this range. So we are between 15,600 points, 16,000, the main resistance that we need to consolidate or secure to talk about this as a support and not as a resistance. And therefore, if that happens, we can also face the 16,300 as a next target, natural move on the market. I also mentioned already the weakness of the dollar the last few weeks. Euro dollar therefore is rising, as you can see. If dollar is getting weaker and weaker, therefore euro dollar is rising. Still, when Europe is giving us really weak and poor numbers in terms of macroeconomics, in terms of data, purchasing manager index is so low for France, for Germany, for Europe in general. Particularly today on Friday, we have seen the GDP of Germany dropping, as I mentioned at the beginning. So therefore, macroeconomically speaking, Europe is not super strong and safe area right now. It's officially, technically speaking, a recession, and therefore I do not see a euro stronger than dollar, and I believe all of this rise is just the effect of those worse than expected numbers from 2 weeks ago in US, and the reading the market is doing on the fact that because those numbers are getting worse, US actually is ending the hikes on interest rates, and therefore Federal Reserve is going to stop here the machine and everything's going to be fine. But don't forget that this is just the party effect, the euphoria effect after this. But in general terms, we can see that euro area is weaker than the US area. US economy is rising faster and stronger than the euro by far, and therefore the investment flow is probably gonna go to US before than or instead of Europe. Even if you check the bonds, 10 years bonds, Germany is paying 2.65% returns on 10 years bond and 3.07% on 2 years bond. If you compare those numbers with US is paying to you almost 5% in 2 years bond, compared with the 3% by German bond. Therefore, the money is well paid in US more than in Europe, and that's why I believe the flow of money gonna naturally going to US instead of to Europe, and therefore euro dollar should drop, fundamentally speaking, right? We got certain resistance, so sooner or later we gonna see, in my eyes, in my opinion, a drop on euro dollar and a recovery on all the drops that we have seen on dollar index over here. Now, if this is happening with dollar, naturally gold should be strong, should be rising, and here it is. It's almost in $2,000 per ounce, so gold is actually strong. It's keeping really well, and it's around this area, but not further than that. Taking consideration that gold was rising above those levels recently, just because it was the threat of a third world war and escalation of the conflict between Israel and Hamas. In that context, yes, gold was rising. Out of that context, or considering that conflict over or under control, gold is not rising, and the only effect we have seen here on gold is just due the weakness of the dollar. That's it. This was the effect of the Israel and Hamas war from here to here quickly, super quickly. But now this movement is probably just the effect of, okay, if Federal Reserve is over, if Federal Reserve picked the interest rate policy, it means like since now on, all we're gonna face in the future is just a cut on interest rates, and therefore gold gonna remain strong. That's, in my opinion, fundamental understanding of these last movements in gold. And still, I will keep an eye on gold because it's super interesting. Look at 2000. For me, the natural runs of gold is this. It means like it's between the 2000s and those $1,700, $1,800 per ounce. So therefore, come here. It's drop to those levels will be again a natural movement on gold. What else? We also mentioned oil already at the beginning of the video when I was talking about the disagreements between Africa energy producers, oil producers, and Saudi Arabia. And I think the only remain market we didn't mention, it was Bitcoin, and it's doing amazing. It's doing super well. It's already breaking 38,000 points. Dollars, sorry. It's already broken those levels, and as you can see, it's in a bullish trend. Has been doing really well because regardless if the market is rising or dropping, Bitcoin has been rising, and this is something that's happening only this year. And I mentioned already in the previous videos this, but I believe this new behavior from Bitcoin show us that it's actually a kind of safe haven. It's actually a digital gold. It's working really well in that sense. If the market is dropping, Bitcoin is rising. If the market is rising, Bitcoin is rising, and therefore is working really well as a hedging asset, or as an asset for hedging your risk or exposure on the market, which is what it's supposed to be, and what they told us, crypto funds told us time ago, that it will be the digital gold promise. Well, I think that's all, my friends. I hope to see you in the next weekly market reviews, and if you like it, just let me remind you once again, I publish every single morning a fresh review of the markets, a fresh comment on the markets, touching all the macroeconomics and data and last news, even geopolitical, time to time. You can follow them through LinkedIn, or you can just send me an email and request me a subscription to my private newsletter. I'm just doing this newsletter privately for colleagues, for clients, for friends, and so on. So you are more than welcome to send me an email and request to join this newsletter, and I'm gonna send to you every morning from my private email to your private email the last updates. Okay, that's all from my side. Take care and have a good weekend. Bye bye.